Hello, everybody. Okay. All right. So, guys, this is our technical analysis class, and this is module 3 of our course that we're doing. And this is lesson 1 for lesson 1, module 3, technical analysis. And this is just the introduction to technical analysis. Um, what is technical analysis? And what are things that make up technical analysis? How can we use technical analysis in trading? And some of the things we have key indicators, moving averages, RSI, the MACD, support and resistance levels for options. These are things we're going to be talking about in our technical analysis class. So, what is technical analysis in options trading? Technical analysis in option trading involves analyzing historical price movement, trading volume, chart patterns to forecast future price trends. Unlike fundamental analysis, which look at a company's financial health, technical analysis focuses on market data and behavioral stock prices. It helps option traders make decisions based on price momentum and patterns that indicate possible future movements. What does it mean? It's simply trying to tell us that in option trading, when we're using technical analysis, we're using it to analyze the movement of the market, right? To see how the market is moving, to see how price is reacting to certain level. That's where we see candlestick movements up and down. So in technical analysis, we're using it to analyze the movement of the market and to see how prices are reacting as the stock moves. If it is moving in a negative direction or in a positive direction, the technical analysis is going to tell us everything based on our chart patterns. So that's what technical analysis is. All right. So what are indicators, right? Indicators. So we're looking at what are indicators, right? Um, moving averages. Moving averages, they're indicators. Moving averages show the average stock price over a specific period, smoothing out shorter term fluctuations. Common types are simple moving averages, which is the SMA, and exponential moving averages, which is the EMAs. So I'm also going to show you guys what is SMA and what is EMAs. So you have to know what that is, the EMAs and the SMAs, right? So these are movements or these are lines in your technical analysis that's going to show you how the market is moving, right? And we're going to talk about all of that in our section, right? I'm going to show you guys everything, the moving averages, how how they react to prices, the EMAs and the SMAs. Then we got the RSI, right? Relative Strength Index, right? The RSI. The Relative Strength Index, or RSI, measures the speed and change of price movement, identifying overbought, oversold conditions. A reading above 70 suggests overbought and below suggests oversold. So what does it mean? We also going to use the RSI to know if the stock is overbought or the stock is oversold. Why is it important for us to know if a stock is overbought or oversold? In price action, we use the RSI indicators, right? It's an indicator. I'm going to show that to you guys. So when a stock is overbought, it means it has been bought by a lot of buyers. So there's need for it to be sold, right? It's more like you go to the store to purchase something and then they tell you it's overbought, right? If something is overbought, It means there's no lot of buyers anymore, but rather sellers. So what's gonna happen? People gonna sell, right? So people gonna sell. So when you sell, when you sell, the price is gonna drop. That's how the stock is. So when you sell, the price gonna drop. So when it is above 70, right? If it is above 70, it's overbought. Below 30, oversold. So if something is oversold, what happens? Scarcity happens, right? Demands. So it's more like supply and demands, like in business management, where we talk about supply and demand. So when the product is not available, we see demands, right? So that's how it is. Like it's gonna be oversold or overbought. So I want you guys to take this and mark this down. When the stock is overbought, the RSI is gonna be above 70. When the stock is oversold, the RSI is gonna be below 30. So know that today, the RSI, and I'm gonna show you what the RSI is and how that can react to price action. We're also talking about the MACD, moving average convergence or divergence, right? So the MACD tracks the relationship between two moving averages to signal changes in momentum, indicating potential buy or sell. If we're using the MACD indicators, hold on one second. Sorry, guys. When we're using the MACD indicator, it gives us the opportunity to understand price movement, right? It gives us the opportunity to know where we can buy or where we can sell, right? So once we have the MACD, it's an indicator that's going to give a signal. Okay, this is a buying zone and this is a selling zone. Or the price is about to swift. There's going to be momentum change, right? Because like I said, in trading, it's buying and selling, which is the sellers and the buyers. There are some people purchasing the stock at a certain level, and there are some people selling the stock at a certain level. So always have this at the back of the mind. If a stock is above 70, it's overbought. When it's below 30, it's oversold. So when a stock is oversold, there's going to be demand, meaning people are going to be wanting to purchase, buy. There's going to be a lot of buyers, right? And when it's overbought, meaning there's going to be a lot of sellers because it's overbought. Does that make sense? So when something is overbought, meaning it's not available. So the only way you can selling is to sell that item that you have. So people are going to be selling. And when something is oversold, what's going to happen is it's oversold. So people going to be willing to buy. So that's how the price action going to be like. So once the stock is overbought, if we're trading option, right? Let me just do a little example here. If we're trading option, the price here, the price leaves from here, it come up here, and then it's not breaking this level. And you look at your RSI, and your RSI is gonna be a line, a two line like this. So one is for oversold, one is for overbought. So once you see, like we said, the price moving in the upper direction, which is up here, right? Meaning the price is increasing. Meaning here it was cheaper here, but now the price maybe it was like $1.50 here, for example. Now it has climbed up to like $3 here. Meaning people purchased the stock at a cheaper price from down here. Now it has come way up here. So what's gonna happen? Because they purchased it cheap, it reached up here and then reacted to price. So what's gonna happen is it's gonna drop in price because what? It's gonna drop in price because what? The people gonna start selling it. They're gonna start selling from up here down, right? So And then this RSI is gonna, the one that for overbought is gonna go above the oversold, which tells you that, hey man, this thing is already oversold, so or overbought. So what's gonna happen is it's gonna drop that in price. So that's when, if we up here and see price reacting here, that's when we get in what? What do we get in here? If we're trading option and the stock is overbought here, what will we do here if we want to ride it down to make profit?
Oh, we call.
We will what?
Make a call.
No, we will not make a call. And if you make a call here, you're gonna lose your money. Because like I said, we purchase the stock when it's cheap, right? Between the buyers and sellers. I want you to notice that the buyers and the sellers. The buyers are purchasing the stock when the price is low, right? They purchase the stock at the bottom here, for example, right? And then the price keep climbing up, 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 up till it gets here. Now it reached to this level. The stock can cross this level to go above anymore. Now it's
Then you
what?
sell.
It's overbought. Exactly. So you're gonna sell. So anytime the stock is overbought, we have to sell. We have to sell. And in sell, how do we refer to sell in option?
We do it will be called quote.
Yes. So in option, we don't say sell or buy, we say put, right? Sell is put. So because price reacted to this level and it's not crossing this level, we're gonna hit put. So we're saying the price is gonna come down, right? So we enter put right here. When we enter put here, the price is gonna rise straight down. As it's coming down, we're getting profit. Now, when you see this RSI, maybe the oversold one comes down here, if the price gets to this level, it breaks this level down here, it means what? It's oversold. What's gonna happen again? People are gonna start purchasing here because what? The price is cheap, right? People are gonna start purchasing. So what we're gonna go in for?
Buy.
Yeah, buy.
We
People
do
gonna
we
buy.
call.
Exactly. So we're gonna go in call because what? The stock is already what? Oversold. So we're
Yeah.
gonna go in call to ride it back up. So as it's going up, we're making profit, but take into consideration, always have a profit target, right? So you're not wait till you say let it reach way up here first before I can take profit. No, because price can react on every level. Every level price is gonna be reacting as it's moving up in whatever direction, up or down. Prices can react. We call it break and retest. Price is going to be going like this. So when you see a chart like this, it's simply telling you these are price reaction, price movement, right? That's how the price moves in the stock market, like this, like this, like this, like this. All right. So this is how the indicators work. So I hope you guys learned something. But if you have a question, you can ask me as well so I can properly explain this to you. Anybody got a
Yeah, I had a
question?
question, but you already I had one, but you already answered it. So
Okay. Got me? You following? Okay, she said I should go over it. Yeah, please, you have to try next time to get all your stuff settled properly because at least we want a class to be interactive instead of texting. So I'm gonna go over this again. All right, we have overbought and oversold, right? When the stock, which is the RSI, as you can see this line here, right? One is for oversold, one is for overbought. Okay, we have this line here, and then we have another one here, right? Let's say the price of the stock here is $2, right? And then the buyers gonna step in here. The buyers, they're gonna step in here, or they're gonna come to do call because they want to rock the stock from two probably to three, four, five, six. Now, if it gets to this level up here and the stock cannot break this level to keep going above, that's what we call overbought, right? The stock is
Yes.
overbought because what the buyers purchase the stock price from below up here, meaning the stock is overbought, right? And if the stock is overbought, meaning there is no much buyer anymore for the stock. So what's gonna happen? The seller's gonna step in, meaning those that purchased the stock when it was cheaper here, the seller's gonna step in and start selling. And every time they sell the stock gonna be dropping in price. It's gonna be dropping, coming back down here. So
Mhm.
when you see like the RSI is above 70, it means it's overbought. When it's below 30, 30
Also,
oversold. So once you see it above 30, it means it's gonna come down. When it's above 70, it's gonna go. When it's above 70, it's overbought. So it's gonna come down. If it's below 30, it's oversold. So when we are doing price action, we are always looking for opportunity to enter the market. So the way we trade this is we'll be looking for reaction where price is reacting, right? Everywhere price react, we look for that area, which is called support and resistance. But we'll do all of that in our technical analysis class. Did this make sense?
yes.
Okay, great. So another thing we're gonna be very strategic about is called support and resistance. What is support? What is resistance? As you can see this line, right? You see, like I said, these are price movement. These are action. We call it price actions. Every level price react. Every level price react. This is not just an ordinary candlestick we're seeing. These are price reacting to every stage or every level, right? So we have something called support and resistance. What is support and what is resistance? I'm going to say in a very simplest term so you can understand what that is, right? Support, I like to see support as where you get support from somebody to keep moving up. Like if you're doing track and field, right? You need to get support. The support could be slingers, it could be drinking water, it could be wearing good pad in your shoes or whatever it is. These are all support, or it could be motivation, it could be whatever. So the stock needs support. And how do you identify support? Is at the bottom, like the last bottom of the stock, right? That's what we call support, where price fell, right? Where price fell or where price stopped. That's what we call support. And what is resistance? Resistance is like where the price reached and it failed to go above that level, right? So as you can see on this line, you see this candle, you see this here? You see this here? You see this here? Did it did they break this blue line to come down?
Mm.
It didn't break this line. You seen the blue line? It
No.
didn't,
Yes.
you not
Yeah.
seeing my screen?
No, I am. You asked a question. I said no.
Okay, great. So it didn't break this blue line. This is a support level, right? This is a support level. And up here, did it break to go above?
No.
No.
Okay, so this is the resistance level. So every time you see this candle going like this, coming like this, 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 these are support, resistance, support, resistance, support, resistance, support, resistance, support, resistance. But if it breaks this level, this resistance level, and it goes above, then it means this place become what? Where how this place? Where is
It
how?
become another support.
Great, 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 great. That's it. So this play becomes what? Another support level, meaning price is gonna come, hit this level, go up, hit this level, go up, hit this level, go up. Now here becomes what? Resistance level. Here becomes what? Another support level. That makes sense?
Yes.
We understand support and resistance now?
Yes.
Okay. So I'm not gonna I'm not really gonna bulk you guys a lot with this course because we're gonna do real-time action, but I just want to give you the in-depth first before we can get on the chart for me to show you what I'm talking about. So every time you see a candlestick or you see a candle like this, right? Understand here is support, 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 and up here is what? Resistance, right? So if it breaks above this resistance level, here becomes what? A support level. If it breaks, if price breaks below this support level, then this becomes what? Are we there?
Yeah, what was the question?
Okay. So what I was saying, right? If
Mm-hmm.
price, now let's say price is like this in this range. If price break above this
Mm-hmm.
level, this blue line, here becomes what? The blue
Mm-hmm.
line becomes what?
Support.
The second support or
Okay,
new
this
support.
no, this blue line becomes a support. Once the
Yeah.
price break above this support level, this resistance level, this blue line becomes another support level. It becomes
Yep.
another support level. And then it's start going to form another resistance level up here. But if it breaks below this line, if the stock breaks below this line, right? Here becomes what?
Mm-hmm.
This support level becomes what?
It becomes resistance.
Exactly. So this support level becomes another resistance. Now price is gonna hit here, come down, hit here, come down, hit here, come down. So these are strategies in option trading or in the trading world as a whole that people take into consideration support and resistance. You have to, as a beginner, you need to have this to the tip of your finger. Nobody taught me all these things. I took many months sitting down, watching YouTube video, doing research to learn all these things. And as a beginner, you need to know what a support is. You need to know what a resistance is. Because every movement, every candlestick, every chart that you see, there is a meaning. It's telling you something. And you can only know what it's telling you if you can determine some of these movements, like know what your RSI know what your MACD is, know your support and resistance level. And we're gonna go in depth with this. So today, I'm just gonna stop. Yeah, we're almost done. So let me just go through this. So we got the line charts, right? Shows the stock price movement over time. So where you guys are going to see what a line chart is. So as you can see, these are lines here, right? All these lines in the box, then these are lines, right? And these lines here, these are all prices of the stock. Like every line it reaches to, you see a price here. Every line it reaches to, you see a price here. Every line it reaches to, you see a price here. Every line it reaches to, you see a price. As you can see, it's going up. What's happening to the price?
Uh, I can see your screen well, but I think the price should be able to go up.
Yes, so the price, hold on one second. Can you see it better now?
Yeah, yeah.
Okay. So here you see prices are going up, 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 up. So as we as we saw support and resistance, every time the stock breaks a resistance level, it goes up. Every time it breaks a resistance level, it goes up, break, go up, break, goes up, break, goes up. So as it's going up, the price is going up, and that tells you what's happening. Who's in control of the market when you see the stock going up, 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 up?
Um,
Because like I
when they start
said, there
going
are
up,
two people in the market, the buyers and the seller. So if the stock keeps pumping up, going, 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 who's in control of the market at that moment?
they, I think it's if it's going up, it's being controlled by the buyers.
It's like
Exactly. The buyers. So once you see the stock price keep going up, 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 it means there are a lot of buyers, people still buying the stock. So the reason you're gonna see like this, like this, like this, like this, like this support resistance and keep going up is because every time the stock reaches to the resistance level, some people sell, they reach at this level, and the buyer said, no, we're not going further down. I'm sorry. The buyers like, no, we're not going further down. We'll push it back up. They push it back up again. And then when it reach to the level again, and then the sellers are like, no, we'll push it back down a little bit again. Some people will sell from up here, it comes down here. Some people buy from here. Because the reason it keeps going up is because the buyers are more than the sellers, right? So every time you see the stock pushing up, it tells you what? The buyers are more than the seller. Every time you see the stock coming down, it means the sellers are more than the buyers. I want you to mark that today. Every time the stock price is going up, 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 it means the buyers of that stock is more than the seller of that stock, right? So these are little things, strategies that you have to know before you can get into a trade or before you can put a trade in. You need to see where the market is heading. We call it the trend, TREND. We call it a market trend. You need to know which direction the market is going in before you can even talk about placing a trade. So if you see the market going in an upward direction, it means the buyers are in control. In such market, where you think you will want to put your trade, which direction you think you will want to follow?
Follow the crowd.
Exactly. So we call it momentum. So some people who trade, they call them momentum traders, right? So they follow the momentum, they follow the trend. So in this case, if you're doing an option, you open your chart, you see like the market keeps going up. What will you do? Will you do put or you do call?
Call.
Exactly, you do call because what? The market is going up, up, up. But if you see the market coming downwards, coming downwards, what you would do? You
Use
do
put.
put, right?
Use.
Yeah, because the
Yep.
market is coming downwards. So it means who's in control?
The sellers at the time.
Sellers.
Exactly. The sellers are in control of the market. So even like if you're trading Forex, in Forex, we don't do call and put. In Forex, we do buy and sell. So that's how in Forex it is too. You buy and sell. In Forex, it's called buy and sell. So you need to understand that moving forward, like, okay, if the stock keeps going up, up, it tells me that the buyers are in control of the stock. But if the stock keeps coming down, it tells me that the sellers are in control of the stock. And how do you identify buyers and sellers? What color do you determine who is the buyer and who is the seller? We talked
On
about
this
that in the
chart,
first class. What can you,
on the,
how do you identify a buyer and a seller? What color is the buyers and what color is
oh,
the sellers?
is the green candle, the green and red. Like,
Okay, green is for who?
oh, the green is for, uh, I think the green is a good sign. So it's for the,
The buyers.
So,
the
so,
sellers or buyers. I'm
sorry.
still confused on these words, on these terms. Yeah.
Yeah, it's all right. You guys gonna get it. It takes time. So
Yeah.
the green candle indicates the buyers. The red
Okay.
candle indicates sellers. So anytime you see red and green candle, once you see the red, know the sellers. Once you see the green, know they're the buyers, right? So learn this today. And one of the other ways we can call it, instead of saying buyers and sellers, we can say the bears and the bulls. The bears are the red, the bulls are the green, right? Or you can say the buyers and the sellers. All right. We're making progress.
Yep.
Okay.
Yes.
So every time you see the price going up, who's in control of the market?
The buyers.
Anytime you see the price coming down, who's in control of the market? The sellers. Okay.
Sellers.
Yes. So as soon as you see a chart, be able to identify who's in control of the market. One of the things too that can give you clear understanding is how, when you look at the chart, how many candles are red, how many candles are green. That can also give you a clearer picture
What if they are
of,
equal?
then If, all right, so we have something called consolidation. I'm going to show you guys what consolidation is. But during consolidation period, we don't trade. So it's going to be like here. I'll draw these two lines. Consolidation is like this is support, this is resistance. The market is just going to be in the middle here. So if you're trading option, remember we said option deals with time, right? If a market is consolidating like this, where there is no active price movement, price is not coming down, price is not going up, it's just in the middle, we call it consolidation. This kind of market, stay away. Don't put your money because you will lose it. Because remember, option deals with time, because the time you're putting in for your money, time is going, right? The time is going. The time is going. So if you disregard that and you don't put that in, that becomes a problem. So you will lose your money. So the best thing, do not trade during consolidation time. Stay away from the market till you see active movement, which is called volume. This thing you see down here is called a volume. We'll talk about all that um, um, in our next class. So here, what do you see here? These are candlestick charts, right? These are candlestick charts. So remember what I said, the bears and the bulls. What do you see here? Bears, right?
Mm-hmm.
And it's bearish. So anytime we see the market, if it is red, we say the market is bearish. When it is green, we say it's bullish, right? Because this is bear and this is bull. So every time we see the candlestick red, we say the market is bearish. Every time we see it green, we say it's bullish. Now, how candlesticks work? This is the low and the high, right? The low and the high is like here is the high of the candle. The bottom is the low of the candle. Here is the low of the candle. The top is the high of the candle. You understand that?
Yeah.
High and low. So know the low, know the high. Know the low, know the high. So when the market opens, you need to learn how sticks works, right? On the red, it opens from the high. The red, right? The red opens from the top and it closes to the bottom. But for the green, it opens from the bottom, it closes to the top. What does this mean? It means from the bottom here, right? From the bottom here, the buyers step in from the bottom. Remember what we said in our previous class? What happens? People purchase when the stock price is low, right? And when it goes up, what happens? They sell, right? That's what we said, right? So here is the low. So the market, the green opens from here, meaning the buyers open from the bottom. That's where the buyers enter in from here. And then they go, they ride the stock till it comes up here to the close, right? When it reaches to the close, what's gonna happen is the sellers are gonna jump in, which is the open, and the seller pushing it down. So it means like the sellers are trying to push the market from the upper side downwards, and the buyers are trying to push the market from the downside upwards. That makes sense?
Yeah.
So what determines who wins the market? Is it like the buyers at that time will have more money than the sellers, or what?
So what determines is that's what we have candlestick, right? That's what we have these candles. So assuming you have one, two, three, four, five candle, green, green going up, covering this entire red candle. What it tells you that the buyers are more in the market than the sellers. Now, the reason why the buyers could be more in the market than the seller is probably the belief that the stock is going to go up in price. So they're looking for profit and they keep buying it to every level that it reaches, right? So the buyers probably believe that, hey man, this stock is gonna go up. So I will keep purchasing, purchasing, purchasing. So the more money people put into the stock, the more the stock is going up. If the stock has reached to a point where it's not moving forward, there is no positive news about the product. Because remember, we're purchasing ownership or equity into a company, right? So if there is no good movement within the company, if there is no positivity or product coming up or any positive news about the company, investors are going to be scared, right? Like we're investors, so you're going to be scared. Like, this thing has reached to the top here, or it has reached to this level. I'm not sure the way the company is right now. There is no prospect on this company, so I'm just going to sell my position and get out, right? And that's when you see some people starts to sell. But for we option traders, whichever way it goes is still in our favor. We can sell, we can buy. We can buy, we can sell. That answers the question.
Yep.
Okay. So using technical analysis for option trading, how to set up, how technical setups can influence option strategies. Time frame, we got time frame. So what is the time frame? Time frame plays a critical role in option trading as they determine the expiration date of an option contract and align with the trader's strategy based on market analysis. Different time frames suit various trading styles, objectives, risk tolerance. Now let's break it down. So we're talking about a lot of things here today. Now we talk about the RSI, we talk about the MACD, we talk about the moving averages, we talk about support and resistance, right? So now I want us to get on the chart. Can everybody go to that computer right